Well, good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Wednesday, the 5th of March, 2025, 6:20 p.m. Central Time. What you're going to get tomorrow is we have a lot of data coming out. So let's see if I can bring that up for you. Challenger Group's going to come out with the U.S. planned job cuts, and that's the corporate cuts, around 6:30. Second quarter revised non-farm productivity data, not looking for big changes there at 7:30. The trade balance data is going to come out. They're looking for about a 30 billion increase in it, from 98 up to nearly 120s. The January wholesale inventory and sales data will be updated in the morning at 9 o'clock. Jobless claims are due out at 7:30. There's just so much around 7:30, as you can see. I got that 9 o'clock one out of sequence there. But at 7:30, you're going to get that. And they're looking for a decline of about 7,000 on the claims. And we'll get the natural gas storage report, and that's at 9:30. They're looking for 99 billion cubic feet to have come out of storage. Now, today was about tariffs, the conversation the president had with Congress last night, and talking to the American people. And I'd rather go into that, if that's okay, in the financial update. Let's get this one and go right to the chart action and what we've got. You can see that you're up a little bit tonight in the energies, not very much. Bonds and notes, they're adding back some yield. You did lose the embedded reading on the close, the bullish ones in the 5-year notes, and we'll cover some of that in a little bit, but I can tell you that did happen. In the foreign currency market, the question is, did the dollar overdo it today, and we due for a little bit of a bounce? Hard to tell. But when you look at the gold, you are up $78.50 right now for the week. You're knocking on the door to see if you can get up to the all-time high close. If you look at the chart action, from my perspective, you have a trading range of a top right up here, where I'm pointing, down to this low, just under 28.50. You've had a pattern of lower highs, lower lows. This rally that you had today to 29.41.30 did not take out the rally high up where this arrow is at 29.42. If that's taken out, then the market can say it's no longer in a downtrend. So far, this is a bounce, and as you can imagine, where you bounced up is the 18-day average of closes, what I call the line in the sand. Now, what the market has done is it's staying now for a couple of days over that number, giving the market upside bias, but the trend of the market via the swing line is down. You have a market that's in a very rough position. 4 days ago or so, you fell down to the lower Bollinger Band. You were oversold at that time. The market held that band, and if you've taken my enhanced Bollinger Band course on our website, iraepstein.com, you can see what the market did, why it should have done that, and now the market's sitting, what I call, in no man's land right now. I'm looking to see what the next move's going to be. If the market can roll under that 18-day average and not take out 29.42, it gets more bearish, not bullish. If it gets over 29.42, you change the game. The gold-silver ratio is falling. Now, China has begun their party Congress. It began today. It goes for 6 days. So each day we're going to get more information in the morning as we come out as to what they're doing. They are starting to look more inward. They have to. Their model of just let's manufacture at any price and sell it abroad and grab market share. Well, now the retaliation is happening and they're seeing it. So they're turning inward at this point in time, and that's something they have to do. As they do that, and as they try to stabilize their market, so to speak, and produce more products for the Chinese community within China, you're starting to talk about where's the further escalation going to come. And people think the escalation in tariffs, and that's what I'm saying, is going to come on the metal market. So silver could be one of those. Copper, certainly. Copper soared today 20 cents in the morning. And I was saying that, one of the first things you look at, if they're doing positive things in China, copper's the canary in the mine. You always look, and they're going to do things. That's the one that you get the pop, and it did. When we look at this, silver got the pop today. That is why the market switched from red to gold, and you could see how it's over the 18-day average. It is not trending. It has a lower low, a higher high. It's got bias today over the 18-day average for the first time in a while. And again, The market, as I pointed out to you each night, this combination of the 100-day average in green and the Bollinger Band down to the second level of the 200-day average in that was just too much for the market to stay under, and you gave it a big pot. In the copper market, look for big resistance right here. You're back into an old high. Do I know what the party Congress is going to say? I don't. Do I have an idea they're going to try to support their markets and copper can get a bid? I do. Would I tell clients that they should buy a Bollinger Band? Never. I'd wait for the markets to come back and give you a better story. This was a short covering rally, in my opinion, not necessarily new buying. A fear rally, a tariff rally, listening to Trump last night, all that came home to roost. In the platinum, you didn't get that type of number. You rallied back into what we've looked at. And I've been saying this, a bear market rally into a combination of the 100-day, the 200-day in gray, and the red line, the 18-day average of closes. You lost the momentum to the downside, but you're still oversold. And in the dollar, Trump is doing this. You know, go to my website tonight. I did a report that's just about 6 minutes long for you. And I think what we're getting from President Trump is a plan for an engineered slowdown to break the dollar, get the interest rates lower, get the Fed on board that the economy is eventually going to need help. At the same time, reduce the trade deficit via what Doge is doing and spending and so on and so forth. And I think it's part of his master plan. And, you know, I don't think it's anything that he didn't say when he ran for the presidency. He's just executing it, and people are having trouble understanding that. So the dollar down here makes all the sense. Do I think it's going to crash further? Well, if it does, we get numbers in the 90s. As the next projection. So I don't. I think this is an area where you start paying attention. It is not an area to go long. That is not what I'm saying. But you've reached a third price count. And price counts are very important. You can go to fourths. It's rare. That's what I'm saying. So I'd pay good attention to all that going on. And the next thing you want to pay attention to, because I was having an interesting time looking at them today, is our Pivot Point series. It's a 3-part video series. You learn how to work with this indicator called pivot points. It's only for in and out trading. It's not about trends at all. It's about catching the turns in markets. And what I do is I tie it together with momentum from the slow stochastic and this indicator. If you have any charting service worth its salt, you have pivot points. You may not know how to work with them. This is a free service that we have for you. It shows you how I teach, and then you go on to the other charting courses that you pay a little bit for. And I use the word a little bit, not thousands of dollars like some of these courses. Go to iraepstein.com, free offers. Move your cursor up here for free offers, and away you go. I'm Ira. You have yourself a great evening. Take care.